Cool. All right. Let me go ahead and bring the camera in so you guys can actually see me. All right. All right. This is my boy Austin. You know, I'm Roger, and we're going to talk about this deal that he has. And then I'm going to get on the whiteboard and break it down for you guys to see exactly what we're talking about. So, Austin, which property and what kind of property is it that we're talking about right now?
Great question, man. Roger, thanks for having me. So basically, it's a great question. So what we're looking at today is multi-family property. And what I've learned about investing in other types of asset classes is multi-family you never lose. Why? Everyone has to live somewhere, right? So we're finding we're buying affordable buildings in great locations with high demand, where we're capitalizing on first buying it below replacement cost, and two, the rents are way below the market. So we're going in there, we're adding a tremendous amount of value through renovating the apartments, we're doubling the rents, and then we actually go back to the bank, refi, pull all of our money out. But to answer your question, we're buying 17 apartments. 9 of them are in Westchester County, about 60 miles from Manhattan, in Peekskill, New York. 2 different buildings. One's a duplex, and one's a 6-family with actually another house attached to it, which is a home run. It's really like 2 apartments because it's a 4-bedroom. And the other 2 buildings are in Brewster, which is about 20 miles north, incredible area. Then we're getting 2 4-families right next to each other as well. So a package portfolio of 4 buildings, great markets, all free market, and we can do what we want with the rents, and they're multifamily buildings.
Awesome. Okay. So I don't know if you guys heard what he said. Basically, what it is, it's not one building, it's several properties, and it's called a portfolio. So what they do is they go in, is it one owner or is it like a corporation that owns all of these?
One owner, private owner.
All right, so it's a private owner. He's accumulated all these properties over the years, and now he's ready to sell them. And what they're gonna do is they're gonna go in, right, pick up these properties. Like he said, they're going to fix them, spruce them up, make them look pretty, raise the rents. When you raise the rents, the banks look at that, and that's what increases the value of the properties. Correct?
Yes.
All right. So these are all spread out through Westchester County. Do they go into any other counties?
Yeah, so Brewster's in Putnam County. It's actually really, really good location. It's 20 miles north of Peekskill. You can be there in 20 minutes. And it's funny enough, it's actually a more affordable county, but the rents are higher, which is crazy. Section A rents are higher, more rental demand, because it's more of a homeowner county than Peekskill. Peekskill is more of a rental market. So there's not a lot of inventory in areas like Brewster. So the renter was super high, the demand, and also the price and the rental is high. So, but they're all within 30 minutes from each other.
All right. So my next question is going to be, is these glasses hurting my eyes? Sorry. What makes this portfolio deal better than buying any other property? Are you buying it below market value? Are you getting a seller financing deal? Are you getting low interest rate? What makes this portfolio deal so attractive?
Yeah, great question. I love the question. The answer to that is one is we're buying it heavily below replacement costs. We're buying it so below replacement costs. We got offered by a local investor a $250,000 assignment fee, which means flipping the paper to the deal just to walk away from one building. There's 4 buildings, so we're buying it super below replacement cost. The other great thing, especially Roger in New York, you know this, is a lot of places in New York, there's stabilization, rent control. Here's all free market, and they will never have rent control in these areas. It already passed as a free market territory, which makes it incredibly valuable because there's not a lot of them left in these areas. So it's free market. We're buying way below replacement costs. The buildings are actually clean. Even though they do need upgrading, they're clean, like solid roofs, windows, boilers. The big stuff is solid. We just got to go in there and spruce it up, like you said, clean it up, spruce up the kitchens, the bathrooms, and then we're going to add a tremendous amount of value to the property and be able to pull out all of our cash. So one, we're buying heavily below replacement cost. 2, it's free market. 3, it's relatively clean and good buildings in great locations. And 4, we're going to be able to cash out, refinance, and whoever invests in the deal will get all of their money back and still have ownership or equity in the deals.
Yeah, that sounds awesome. Yeah, but explain to everybody who, if anybody's even going to watch this, what it means to purchase at below replacement cost.
Yeah, so I look at like a piece of gum. Let's say you go to the grocery store and the gum's $1. Let's say I go to another grocery store and that same gum, the Hubba Bubba, is 70 cents. I just saw it trading for $1 and people buying it online. Now I'm getting it for 70 cents. So I'm buying it below what the replacement value of the property currently is. Not in the future, what it is worth today. We're buying it 30, 40% below what it's worth today in today's economy.
It's almost like a rental arbitrage of some sort, right? People buying
Exactly.
it at Costco and selling them on as Amazon for a profit.
Exactly.
Awesome. Okay, that is great. What was the other question? So I actually made a video explaining the infinity part where people get their money back. So I have that covered. I'll show you. I'll send you that video so you can see it. I got stuck. I got stuck. I'm gonna be
You're
out.
good. You're
You
good.
said four things. Oh, you said assignment fee that somebody offered you $250,000 for just one of the buildings. All right.
Mhm.
I understand what that means. I know what flipping paper means, but can you explain that really quick to whoever's watching?
Yeah, so basically, obviously, we know a lot of investors, and people know what we do. A lot of our best value add and our best assets we find off market, below replacement cost deals. So one of the local investors heard, because he was probably going after the deal too, that we had it in contract. He had reached out to my brother, and my brother said, out of curiosity, what would you even pay for it? We're not looking to sell, but what would you pay for it? He gave us an offer $250,000 higher than what we have it in contract for. So technically and legally, we could flip that paper today before we closed and actually make $250,000 without having to close on it, get a loan, sign for a loan, anything like that. And that's how I know we have a really good deal. If we're able to get that type of assignment before even closing, we know we hit a grand slam.
Awesome, awesome. So I'm gonna translate what he said into layman's terms. He said assignment fee, right? And all this stuff that you probably don't understand. So basically, in real estate, what a lot of people do is that they'll put a property under contract to purchase it, like they're going to buy it. And what happens is somebody else can come and say to you, "Hey, listen, I want that property," and you have it on the contract to purchase it for $100,000. I'm using very simple numbers here just so you can understand, right? You put on the contract for $100,000. They hold the contract to buy the property for $100,000. And somebody comes and says, "Hey, I'm willing to pay, $200,000 for the property. You have it on the contract for 100. I'll give you another $100,000 above that 100 because I want the property that much. It's worth $200,000 to me." So they would sell their interest in the contract to purchase the property for that additional $100,000, therefore making $100,000 without having to go to the bank to apply for a loan, without having to do anything. I mean, at that point, you don't have to inspect, you don't have to do anything because that person wants to buy the contract from you so bad, they're willing to pay another 100,000, or in this case, $250,000 above what they have it in contract for. That's how you know, like he said, that is a great deal. And since this is a portfolio buy, it just increases the value of the whole portfolio. You
Yep.
know, that's an extra $250,000 in equity. That's just profit like that off the bat.
Yep.
So, how long do you think? I'm going to move on to the next question. How long do you think it'll take to, and I know but you don't know what this means, to add the value add to the properties where you're going to go in there, you're going to paint, you're going to maybe replace some kitchens. How long do you think it would take for all the properties?
Yeah. So obviously, look, we like to under promise and over deliver, just how we like to do business. But we have a bank loan for 18 months, a loan that we can pay off within 18 months. So up until 18 months. Obviously, you never know with real estate and tenants and being in New York, but the goal is 12. But we have the option to go up to 18. It will not go past 18 months. So between 12 to 18, I'm thinking somewhere between like 12 to 14. But that's great. A lot of times people hold on buildings for 5 years till they get their money out. We'll get our money out within 1.5 years. Full cash out, full everything out, and then you're still making passive income every month from the deal.
Okay, so what you're saying is that anyone who invests in this deal with you, right? If they come into my fund and we invest with him, right? You're saying that, let's just say we give you $100,000, within a year and a half, you're gonna give us back our $100,000. That's what you're saying?
Correct. And then you'll be getting paid every month from the property. You'll be getting tax write-offs every year from the property. You'll be getting cash from the property every month. And if we ever have another capital event, you would also be a participant in that as well because you're an owner. You get K1s, you're an owner on the property.
All right, I'm gonna hit you with a hard question now.
Yep.
For anybody who's watching, right? How do we know that you can do what you say you're gonna do? How do we know that if we give you 100K, you're gonna do all these things and give us back our money within a year and a half, and we're gonna continue getting the rent money thereafter?
Yeah, I mean, look, I'm obviously real estate. It's a game of trust. We have pretty much we have a good track record at this point. It is for over 7 years. We have about 540 units right now that we're currently owning. So obviously, we've had a good track record to be able to do that, perform on other deals in the past that are very similar to this. So that's why I'm conservative. 18 is the longer end. I think we can get it down to 12 to 15. But obviously, we know the markets. We know what we have to do. We kind of know all the pieces now. Doing this for about 7 years. So the goal is to get in there, like you said, add value, raise the rents. Once everything is stabilized, meaning the value is higher, we're going to get it appraised, go back to the bank, and then refinance, pull out our initial capital, or very, very close to that, and then put a new bank loan in place. So we're buying on a bridge, which is a temporary shorter loan. And now with the opportunity to add value through construction, once the opportunity is the value is added, we're going to go back to the bank, get a refinance valuation of the property, and then pull our equity out. And then that's when we'll pay all the investors off.
Okay, so I heard you say you have 540 units. Are these
Yeah.
all in New York?
Yep. New York, a little bit in Connecticut, a little New Jersey, but mainly New York, Hudson Valley.
Okay. So how do you manage 540 units?
We have a nice amount of employees, maintenance guys. Right now we have 5 people on the management company, like in the office, leasing agents, property managers, product managers, and then we have a whole construction team too that does all the construction, the maintenance, the light bulb has to be broken, the plumbing issue, the apartment turnover. So in-house team and exterior team for the field.
You also have an in-house attorney, correct?
In-house attorney, yep.
Awesome, awesome. So how has it been with dealing with tenants in upstate New York?
Great question. It's not as bad as downstate, like where you are in the Yonkers, the Bronx, the city. It's a lot better than that, but it's not like Florida. You get them out in 2 weeks. So we're like in a hybrid place where it's like for a true eviction, 3 to 4 months, which the Bronx is 2 years. So like we're only 40 miles away. So I think it's still I think it's reasonable. It's obviously not 20 days or 30 days like other states. So 3 to 4 months for evictions. We try to be really selective who we screen, who we take. So we're extra cautious before we put them in there. But for the most part, we've done pretty well with keeping people in there and not having to really evict. But if we do have to evict, it takes time, but it's not as bad as other places in New York.
Ooh. I have a question that has. How old are you, man? And you say you've been doing this for 7 years. What how did you get into it? How did you get started? And just explain that real quick for anybody watching.
So I shaved today, but I'm an old ass 27-year-old, So just turned 27, and we started actually about 7 years ago from 30 days. We started August 13th of 2017. It's been about 7 years. Been in business for. Started with nothing. We dropped out of school, my brother and I. We found a course online, Roger, that said, "Hey, how to wholesale real estate with no money down, no credit." We're like, okay, we have no money, we have no credit, we're not an agent. Let's get into this. So we started wholesaling. Asked just like anything else, took time, took a lot of energy and effort. We made no money for 9 months, no money. On the ninth month, we got cashed our first check, like 15,000, and then off to the races. We did another deal, and then another deal, and then long story short, we started a lot more deals. But it took 9 months for our first deal, and since then we've done about 500 plus.
I love it, man. I love it. A lot of people look at your age and they say, "Oh man, he's young." To me, I think that's a positive because you're younger, you have more time to be in the industry, and plainly you have more energy.
Amen.
But it's awesome, man. Listen, I know these guys, I love these guys, and that's why I'm willing to work with them. That's why I'm putting the fund together to invest with them. I've seen the properties, I've seen the deals. I've made money with you guys, and I love working with you guys.
Amazing.
You did say something then, and I lost my. That's another thing about getting a little older. You start forgetting stuff. I need to start writing things down so I can ask you these questions, man. But you know what? How about we go to the whiteboard now, and we talk a little bit about this deal.
Let's
You
do
know?
it.
All right,
Let's
cool.
do it.
Let me know when the camera is in good range there. I should go up.
Perfect. A little up, a little up. Perfect.
Cool, awesome. All right. Yeah, man. I'm glad we're doing this, man. I've been wanting to do this for a while now.
Let's roll.
I'll let you. So you said, so what's the total purchase price that we're looking at?
2.6 million.
So it's going to be two, and let me know if you can see this, 2.6 million, right?
No, it's perfect. Yep.
All right, so that's the purchase price. What is going to be the down payment?
To the bank's down payment at closing.
Yeah, what do you got to bring to the table in order to purchase this property?
So the actual down payment before closing costs, fees, reserves, capital is 500K down. So it's a $2.1 million loan.
It's a $500,000 down payment.
And there's about 150 in soft cost, closing costs. We need the first construction draw, 150 in soft for a total of raise of 650.
Okay. So total $650,000 to get into this deal.
Yep.
And so the bank is lending how much?
2.1.
Bank loan is actually 2.1 million, right?
Yep.
What was the appraised value of the property?
It's appraised right now for about 3.5.
So the appraised value is 3.5 million on the portfolio. So right there, we have how much? Is that 900,000?
Yeah.
So right there alone, that's $900,000 in equity. And so for anybody watching, that's a profit of $900,000 on day one of buying it. We're not even talking about how much money the properties are bringing in rent. Do you have that off the top of your head? Rent
It
roll?
brings it about 28,000 a month right now. A little between 20 and 29.
So it's an automatic profit of 900,000, and I believe you said $28,000 in rent per month, correct?
Yep, gross. Yep.
That's this is ridiculous, dude. This is a no-brainer.
Yeah.
Okay, I'm gonna bring the camera up a little bit more. All right. Is it better?
Perfect. Yep.
Okay, cool. How much do you think you have to put into the property to spruce it up? Whether you're doing kitchens, I don't know what you guys need to do. Haven't seen the properties, but what do you think you're gonna do and how much?
Yeah. So 4 or 5 apartments have been redone, cleaned up, very nice. So we have another about 12 to turn. It's going to cost us about 15,000 a turn. So you're looking at 15 times 10 is 150, plus another 30 is 180, plus another 50K in other costs, exterior, cleaning up hallways. It's about 250 in renovation. So 250 on the reno side, being conservative.
Okay.
So then we're going to be all for about 2.85, 2,850,000. Be all in.
Okay, so 2.85 into the deal after the renovations.
Yep.
Right? You said these rentals are going to be done in was it a year and a half or less?
Well, 12 months we don't renovate. Yep, 12 months.
All right, cool. That's awesome. Okay, cool. Okay. So for anybody watching, just so you know, what I'm focusing on here is not all this, right? It's here. The $900,000 of equity, which is the profit on day one, and the $28,000 per month, which after they make these renovations, what do you think the stabilization of the rent is going to be?
45.
So it'll go from $28,000 a month up to $45,000 a month. That's awesome, bro. That's just great.
Home run, dude. Home run. Home run.
So for anybody watching, right? You come into the fund. Let's just say you bring in 100K. That looks horrible. I'm gonna have to sit down for that one. That looks horrible. Right. Let's just say you bring in 100K. You invest 100K. You're looking at, what was it? A year and a half for the refinance?
Year and a half for the refinance. Yep.
All right. So the refinance in a year and a half, that means you'll get your money back in 1.5 years. That's ridiculous. What it,
All the cash out. Plus, Roger, I don't think we mentioned this. For everyone who's making a lot of tax, whoever listening to this call, who's making a lot of taxable income, we're doing something called a bonus depreciation, cost segregation. We're writing off the majority of the depreciation in year one to do a massive tax loss for all of our investors. So we're all going to get a bunch of write-offs on year one, which is 2024.
all right. So let me see if I can speed that up in layman's terms. The depreciation is going to be used up in the first year.
Yep.
All right. So if you watch any of my previous videos, I only did like 3 videos, but I spoke about how properties, they deteriorate just like we age and we start getting older. Properties deteriorate and they get older. So the IRS allows you to write off the fact that it's deteriorating. And there's a formula that goes over, I think, was it 27.5 years is the formula, that, right?
Exactly.
But they
Yep.
also allow you to accelerate that 27 years and use it up in the first year. So you take all of that and you just use it in year one. So what that'll do is, let's just say your taxable income is, 100 grand, right? You're gonna get slammed, whatever tax bracket you fall into. But because you're in this deal, you'll be able to use a percentage of your investment, right, to write off, or should I just say lower your taxable income.
Yep.
Okay. Listen, I'm going to be honest with you. There's a lot of people in this country that don't even care about the rest of that stuff. They just want this right here. They want to lower their taxable income because they're getting killed on taxes. So you have a lot of high profile people. You have people that are in sports, people that just have money. Their taxable income is really high. They get into real estate, and because of this right here, the depreciation, they lower their taxable income. This is why when you hear people, the middle class, lower class, anybody just complaining about taxes, it's because they're not doing this. This makes all those arguments irrelevant. This is a beautiful thing. All right. Are you doing preferred income interest at all?
Yep. 7% preferred. So any dollar goes in the deal, not including cash flow. Like Roger said, taxable, lowering your taxable income, any refinance proceeds, any other type of benefits, you're getting 7% on your money throughout the whole process until all the money's back in your account. And then when all the money's back in your account, you own X% of the deal and you get paid for life on the property.
Take a screenshot of this. All right, take a screenshot of this. I want to explain what he was just talking about. All right, take a screenshot. I hope you got a screenshot. I'm getting rid of these. Because what you just said is insane. I love this, man. This is a beautiful thing.
Amen.
It's crazy. Just the depreciation alone. All right. So this portfolio deal, right? Like he said, it's starting off with $900,000 in equity. That means day one, when they close, $900,000. You know what? I'm just going to write down profit. Okay. Day one, $900,000 in profit. You have another $28,000 in rent coming in. All right. Now, let's just say you invest in the fund. You invest $100,000 in the fund. You just said they're going to pay 7% interest, preferred interest. Austin, could you do me a favor and explain the preferred interest to them one more time, real slow?
Yeah. So basically, obviously, when you invest in a deal like this, there's two sides of the coin. There's one where there's equity, which means you have ownership, and you get a piece of the cash flow, and all the equity is basically the risk. You get X% of all the upside, all the good stuff. A lot of investors don't do what we're doing. We're doing basically also an interest, which is you're getting part of the upside, but you're also getting paid every month in your money, just like the bank would, right? So you're getting paid 7% of your money while your money's still in the deal working for you. Plus, you're also getting quarterly distributions of cash flow. So you're kind of double dipping in the deal. So you get 7% of your money for every single year, until all your money's out. Once all your money's out, you have equity and you're going to get paid every single month in cash flow. But up until then, you're going to get paid every month in interest plus quarterly distributions based on how much cash flow we have.
That is beautiful. All right, so let's say you invest $100,000 in the fund, 7% interest, right? That's interest only.
Interest only. Yep.
Okay, interest only payments on $100,000. That means annually, or as long as the money's in the fund, you'll get $7,000. Okay, now every deal is different. Some deals are 6%, some are 7%. If they're paying 7% on this deal, this is what they're doing. Okay, so 7% of $100,000 is $7,000 per year. Okay, that's almost $600 per month. We're looking at like $583 a month, something like that.
Exactly.
Something like that, right? So, think about that. That's $583 per month. You're gonna do it. How are you gonna do the disbursements? Quarterly,
Yeah, quarter. Yep, every quarter.
right? So, every 3 months, you'll get a check for what's five. That's like $1,700, whatever.
Exactly.
Right? You get like $1,700 every 3 months. But this is just interest. This is just the interest, right? This is just interest only. Now, just to explain interest only real quick, that means that you take a regular loan out, right? Like a regular mortgage payment loan or a car loan, whatever. When every time you make your payment, you're paying into the interest and to principal. This is interest only, meaning the $100,000 stays in place. The principal doesn't get touched. You're just making, this is just like extra money. That's like, you guys are just giving up extra money right here. All right.
Yeah.
This is gravy. This is a beautiful thing. Right. Not everybody does this, but this is awesome. You're just making extra money on your money. Okay. So that's $1,700 every 3 months. And like you said, you're also going to make cash flow. Cash flow is basically your percentage of the rent that's being collected. Okay.
Yeah.
That's going to be your percentage of the rent. Do you know what the number? I don't know, for 100,000 with percentage. That's I don't want to get too complicated. Just know that you're going to make 7% interest on your money, plus you're going to get a percentage of the rent roll. All right, that's monthly. You're going to do that monthly. You're going to do that quarterly.
Quarterly too. Yeah, everything done quarterly.
Yeah, quarterly is better because it's just a lot of paperwork. I know you want the money monthly, but you're going to get the money anyway.
Exactly.
So take a screenshot of this because I want to go ahead and I was going to say delete. I'm going to delete this. So now, yeah, so I want to show you guys something else. All right, get that screenshot. All right, beautiful. All right, so here's the deal. All right, here's the deal. Here's something that I want to talk to you guys real quick. $900,000 equity day one. That's money that they can go to the bank and say, hey, listen, we want to take, another loan or whatever, and use that $900,000 to do whatever they want. $28,000 in rent. The rent roll, this is monthly. They're going to raise that up to, you said 40 what?
Between 43 and 42.5 and 45, somewhere in that range.
Okay, so the rent is going to go, let's just say 42.5, right? So that's a nice increase. That's like, what's that, 14,000 increase?
Yeah, it's about 50%.
Yeah, either way, you're going to make a percentage of that rent roll for as long as they own the property.
Correct.
Okay?
Yep.
As long as they own the property. Okay. Remember, in a year and a half, you're supposed to get your money returned to you. Okay. You get your 100K back. At this point, you're going to continue earning this rent money for as long as they keep the property. Do you have any idea what your exit strategy is going to be here?
Yeah, so we got an 18-month loan from the bank. Basically, we're going to most likely 95%, unless the world turns on fire, is refinance, rates should drop sub 6, definitely the next 18 months, pull out our initial capital, get all of our investors paid down, and I think it's a great place to hold. Free market, great location. Westchester County is one of the hottest markets in the country. I think this thing's worth $4.5 million in the next 3 years. We're only going to owe the bank on a refinance 2.8, 2.9. We'll have $1.5 million of equity, and we're getting paid every month, every quarter cash flow. We'll have a ton of equity if you ever wanted to sell. We're gonna have a great bank in place giving us the debt, and it'll be cash flowing every month. So most likely, unless the market shifts or anything, refinance, pay everybody out, cash out a little bit, and keep the property.
Yeah, yeah, absolutely. So basically what he just said is you'll get your money back, your money be returned to you in a year and a half, and then you just continue you're just gonna get checks, right? Because here's the beautiful thing, right? This is where everybody wants to be, right? Everybody wants to be passive. Like passive income has become like, the thing everybody wants to do, but nobody knows how to do it. Right? Austin and Jake, they have their company set up, right? You invest with me, we invest our money with them. They take care of everything, right? All we got to do is sit back and wait every 3 months to get our checks, right? That's it. You get your 583 times whatever was it, 1,700, and you get the cash flow, the rent money. That's it, And almost forgot, this one is a beauty right here. The depreciation. You're gonna write it wrong, but it doesn't matter because what matters is you get to reduce your taxable income.
Yep, exactly.
Every single year. Well, not every year because you're gonna accelerate to the first year, right?
Correct. Yep.
Yeah. So either way, you're gonna get depreciation. It's a beautiful thing, right? But we still get write-offs. Every year you gotta fix things. You still get you still get write-offs.
Of course, the expenses, the interest, the bank debt, the notes, all the landscaping, all the work you put into it, the capital work, we're all written off for us.
Yeah, it's a beautiful thing. Again, that's why taxes is almost irrelevant. You know what I'm saying? Listen, no one down in Washington, D.C. is going to change these laws because this is how they make money. This is how they keep their money. So as long as they're making money, they're not going to change any of this stuff. It's going to stay in place. That's it, period. All right. So did we miss anything? I want to make sure that I cover everything.
I think you went through everything, bro. It's incredible.
I think we got it all, and of course, there's other things. I mean, we could break things down, but we want to make this as simple as possible so you can understand that, hey, listen, I put up $100,000. A year and a half later, I'm going to get my money back, and I'm going to continue receiving a check for as long as they own the property. As long as we own the property, we're going to continue getting money. Okay? Now, here's the beautiful part, right? Now, I know I made a separate video of this, but a year and a half, you get your money back. You can invest that money on the next deal. You have another deal for us, Austin?
We got plenty of deals, man.
All right. So you're starting to see why this is such a beautiful thing. You're gonna they're making a profit on day one. The reason why that's very important is because it's not like they're gonna be under. They're not gonna be underwater. They have a profit of almost $1 million the day they buy it. Then they're gonna go in and they're gonna fix properties and they're gonna raise the rents. So right there, that's a solid deal. We already spoke about the fact that somebody offered them $250,000 for the contract. Right? So that means it's worth more than the 2.6 that they're buying it for. It's 2.6, correct?
2.6, yep.
You know what I'm saying? So it's worth more. Then you get your $100,000 back after you receive 7,000. What's half of 7,000? That's 3,500. So after you get your $10,500 and you're getting rent money, you're gonna get your investment back so you can get into the next deal. And you just keep flipping your money over and over and over. They keep doing all the work, and we just keep collecting checks.
Love it. Love it. We're happy to do it.
It's a beautiful relationship because everybody wins. Everybody wins. So I don't think we need to cover anymore here. Because this video is already getting long. But Austin, thank you for bringing this deal, and I know you have more deals. And let's get this done, man. If you're interested, there should be a link somewhere down at the bottom. You can send me an email, call me if you know me, get on the mailing list so you can get on the next video, so you can get every current deal that's going on, so you know where are we going, right? Matter of fact, you're gonna do a walkthrough on this portfolio on Wednesday?
Yes, Wednesday the 18th. Yep.
All right. So check this out. I'm gonna make a video. I'll make a video of the properties so that you can see the properties to follow up this video so you can see the actual properties of this deal. Okay? That's awesome, man. This is a beautiful thing.
Love it.
Get a screenshot. I'm not gonna delete it. I mean, I'm not gonna erase it, whatever. I don't even know how to speak anymore. What matters is we can make some money on these deals, man. That's all that really truly
Do
matters.
it.
You know?
Do
That's
it.
it, man. I've been wanting to do this for a while, bro. We
Uh,
wanted to get this on these calls. But did we miss anything?
Then we're good. We hit every topic.
Yeah, I think we did. I think we covered everything. And awesome. Hold on, let me stop recording because you don't need to hear the rest.